Hello everyone, thanks for joining. Happy Pizza Day. I'm just connecting my laptop and uh, yeah. So popular choice on the general channel was shelling out origins of money. I think I remember reading it a while ago. It's a pretty dense article, but it's definitely worth going over and discussing. I hope you guys can see my screen and I'll the article.
I can see it now.
Okay.
Is that still the highest voted post? Okay, yeah, it still is.
Yeah, I think, is there any other format that we can quickly see? But are you guys okay with this? I'll increase the font size. Does this look good?
Yeah, this looks good. But amongst the people who have actually showed up, like, would you want to do this one or Parker Lewis's gradually then suddenly
Right,
one? Yeah, because we are the
right.
ones who are showing up.
Even I vouch for that one.
Okay, okay. Yeah, whoever, whatever you guys prefer, we can do gradually then suddenly as well. Read it recently, so I also have some grasp over it.
Divyansh and anyone else, paper, any feedback, Anurag?
Sorry, feedback.
Any feedback on which article should we cover, Anthony? So there are two competing articles which are like at the pole position. One is Nick Szabo's article on money, history of money, and the other one is by Parker Lewis, which is about like how does this transition might take place of Bitcoin transition. It's called gradually then suddenly.
I find the second one more interesting.
Is that the group consensus? Then we go with gradually then suddenly.
Yeah, I think if anybody has any other opinion, let us know. Else, like more people have chosen gradually than suddenly. So if no
Perfect.
opposition, then maybe we can proceed with it.
Awesome. Yeah.
I'm also good with gradually then suddenly. Yeah, and anyway, if anybody is new to Bitcoin here, then I think gradually then suddenly is definitely a good place to start because it's a very layman friendly article, but at the same time it goes into the depth of money and economics and Bitcoin as well.
Great,
Yeah,
I'm
this
new and I'm a
sounds-
layman.
Sorry.
Nothing.
Okay, I missed that. But yeah, let's start. So, just some background that I have on Parker Lewis. Parker Lewis is, I think, one of the co-founders, if not the founder of Unchained Capital. Unchained Capital is a popular Bitcoin brand for multisig. And what he's more known for is this article series, Gradually Then Suddenly, which is quoted to be one of the most recommended Bitcoin articles for anybody who is new to the rabbit hole. So,
You'll have to zoom in. Text is like way
Ah.
further.
So
A
it
little
was
further.
first published on. Is this good?
A little bit more if you can.
Okay, okay.
Yeah, that's right.
Great. This actually looks grandiose. This is amazing. Yeah. So this was first published on Unchained Capital blog, but I'm choosing to read it from Nakamoto Institute because there's another resource that I'll recommend if somebody is new to Bitcoin here, and it's also greatly formatted. So there's parts of this article series. I think the Nakamoto Institute has divided it into 16 or 17 parts. So I don't know how much we'll be able to cover. I think we should actually be able to cover a pretty good amount. But the point of this session is to have fun. So if you have any questions, any banter, any thoughts, any insights to share, please feel free to pause me and share that with the group. So yeah, let's start. Gradually Then Suddenly by Parker Lewis, first published in July 26, 2019 on Unchained Capital blog. Introduction. This is the first of a weekly series that I have decided to write on the subject of Bitcoin, inspired by my friends Marty Bent and Saifuddin Amos. Education is such a critical aspect of Bitcoin, and I hope that by distilling my own thoughts, I can help others accelerate their path in understanding a complex subject. I've titled the series Gradually Then Suddenly. As Hemingway penned, the process of going bankrupt, it's also the way that government-backed currencies hyperinflate and often how people come to understand Bitcoin. Gradually, then suddenly. Writings will generally stick to Bitcoin, but will also include the Fed and monetary economics, as these stories are deeply intertwined. Because I'll be trying to keep concise, the series will communicate my principal conclusions and opinions rather than setting out to present every detail that led to them. My intention is to provide insight into my thought process and to provide a roadmap if others are interested in learning more. My hope is to reach a broader audience beyond those that have been formative in my own journey and to help folks on the periphery gain a better understanding. So I'll just take a quick pause here. I think this is an amazing setup for Bitcoin and anybody who's new to ideas around Bitcoin. So what I think I said that it's a great resource for anybody who's new to Bitcoin because like Parker Lewis quotes that this is the hope is to reach a broader audience and to help folks on the periphery gain a better understanding of why so many of us are so focused on Bitcoin as a subject matter. Views presented are expressly on my own and not those of either Unchained Capital or my colleagues. Hope you enjoy and please provide feedback. Let's start. So this was the introduction. Bitcoin is money, or rather, Bitcoin has become money to me. It was a slow process that involved unlocking a number of mental blocks along the way, where it began with asking the question, what is money? That is the beginning of the real rabbit hole. And not the speculative, I'm looking for a lottery ticket blockchain is going to change the world kind of rabbit hole. At the root level, it's the rabbit hole that attempts to answer the question, why is the dollar in my pocket money? Why do hundreds of millions of people exchange their hard-earned real-world value every day for this piece of paper or digital representation? It's both a difficult question to ask and a harder one to answer. Something I realized everyone has to approach in their own way, on their own timeline, and guided by their own life experiences. People have to be interested in that question in order to even begin to understand Bitcoin. For me, the path involved first understanding why gold was money. That involved understanding the unique properties which made something a better or worse form of money and what differentiated money as a unique economic good compared to most other types of economic goods. The Bitcoin standard was formative for me in exploring the questions, not as a gospel, but rather as a foundation to think about the problem statement. When I applied that foundation to my own life experiences and to my own understanding of the existing financial systems and its flaws, only then did it begin to become intuitive. And that's something that may be evident that Bitcoin is intuitive as money to those that have spent years thinking about it relative to monetary principles. But it's also true that Bitcoin is not intuitive. It's extremely not intuitive until it becomes intuitive, and then over time it becomes hyper intuitive. Right? Yeah. No, just
that last statement,
That is amazing. Yeah.
That's super amazing, yeah. And I think one quick anecdote that I can share already is that I was at the GoStats event right now and they held up a quiz right now. And I'm not bragging, but I'm slightly bragging that I won. And it was the most basic question. I'm sure everybody here would have answered it faster than me because I don't consider myself a bright mind. And the fact of the matter that I'm trying to highlight here is that to a lot of people, those questions are not intuitive. They were very simple questions and they were crypto enthusiasts or they are working in Bitcoin or crypto or blockchain companies and they have no idea or either they did not choose to. That could be my mistake to assume. But I think there's a huge gap in how some of us, when we start to think, and it's not as if I've been into Bitcoin for very long. Some of us, when we start down our journey down the rabbit hole, we start to think of others, or there's a word for it in Bitcoin called normies, that they don't understand money, they don't understand Bitcoin. But I think it becomes intuitive over time and it's not always obvious why other people don't think about these questions, why they are so elusive to people. Yeah.
Congratulations, Shreyan. This is amazing. You guys should have shilled Bitshala. Bitshala is the secret of my winning this quiz competition.
I genuinely want to do that. Yeah. So I'm still at the event and I think I want to connect with people one-to-one and also share I think my journey into Bitcoin has been because of initially Raj and Vishal, and then Raj gave birth to Bitshala, and because of Bitshala, I've been able to become somewhat of a Bitcoiner, if not anything else. Okay, let's continue. But in case someone wants to share their thoughts, please feel free. As part of my process, I found it helpful to consider Bitcoin relative to two tangible guideposts, gold and the dollar financial system. Does A, Bitcoin share the properties of B, either gold or the dollar, respectively? is A better than B? Because what makes something money is not an absolutism, it is a choice between storing value in one medium versus another, always involving trade offs. Without understanding the flaws of the existing financial system, whether the dollar, euro, yen, bolivar, peso, etc., respectively, I could have never arrived at Bitcoin being money in a vacuum. Right. Yeah, so I think it's I think it's obvious, but also important to state that for most people to understand Bitcoin, we need to convey what the problem Bitcoin is solving, which most people are unaware of. It's like the metaphor that is very popular is fish swimming, fishes in the sea. That fishes are not aware that they are swimming in the sea, that they are always surrounded by water because money is so hard rooted in human psyche that we always think about it, we're always working towards it, we're always chasing it, but we forget what is it in the first place. And that allows the fiat monetary system to continue even though it's a blatant scam. Yeah, just going over this picture, central bank balance sheet, dollars in transaction, 2009 versus 2019. So yeah, over the last 10 years, I think this is about now 15 years, but this is how central banks balance sheet have grown. This is public figure. It's not as if they're trying to hide these numbers. EM currencies versus USD. Yeah, this is, I think this is like the developed world versus developing world charts. But I think this is a comparison of I think this is Turkey, Argentina, and Venezuela. Yeah, and these are the comparison of those currencies with the US dollar. So yep, it's the US dollar is a scam, and the bigger scams are in developing countries. While I worked at Deutsche Bank during the financial crisis, I had no baseline to understand what was actually happening. 10 years later, and after having worked in the restructuring world and at a macro hedge fund, only then did I start to develop a more clear understanding of what had really transpired in 2008 and 2009. Through my own research of the great financial crisis, the Fed, and specifically the impact of quantitative easing, here I came to the principal conclusion that the root problem was that the financial system had been leveraged approximately 150 to 1, too much debt and too few dollars, and that the insane degree of leverage was only made possible as a function of Fed policy, which had consistently prevented system-wide deleveraging over the course of the 3 decades leading up to the crisis. Further, it became apparent that the solution, quantitative easing, merely caused an unsustainable credit system to metastasize over the subsequent 10 years, making future QE an inevitability. I became convinced that whether Bitcoin survives or not, the existing financial system is working on borrowed time, and that one way or another, something other than the status quo will be the inevitable path forward. So right, I think way before Bitcoin, I had heard of the financial crisis, but I had always assumed myself to be too dumb to even begin understanding it. And once you start to understand the problem with central banking and the problem with the expansion of money supply, you quickly realize that the 2008-2009 crisis wouldn't have happened if it wasn't for somebody being able to continue it for long. It's like every other business in the world, when they provide bad service, they fail, and the world is the same. But it requires a monopoly over money to be able to sustain a crisis over a longer time, which explodes into a much bigger crisis. So yeah, the current world is also just running on borrowed time, so it's not as if we have solved the problem of 2008 and 2009 crisis. Yeah, it's only when the crisis hits that most people start to even consider what is happening.
There, like what if there was not a monopoly of dollar? Do you think we would still arrive at Bitcoin standard anytime soon if there were competing currencies? Because like if someone is being very like someone is doing QE and other country can choose not to do QE, other currency can choose to be a little more hard. In that case, I think Bitcoin's adoption would have been quite delayed. But because dollar is the sole sort of currency of the world, I think there's no alternate to dollar. There's no real alternate to dollar. So that's also a reason why probably
Right.
yeah. That's
So I think if I understood correctly, it's that all of the currencies were also inflating at, if not approximately the same rate, but at least in parallel to the dollar also inflating. Is that the reason the financial crisis was a global crisis, not just a US based crisis?
I think the global crisis was because of the credit crunch, because of the fact that they didn't have the money to spend. A lot of money gets spent by these banks, and so the contagion sort of spread it to all the other countries which were relying on those dollars. It was not so much in other countries which did not rely on American dollars, but the more interlinked the world becomes, the more easily that contagion will spread, like any other viral contagion or
Right.
any other.
Okay, I'll continue from here. Then I figured out that Bitcoin has a fixed supply. Developing an understanding of how and why that is possible is the basis of understanding Bitcoin as money. Doing so requires significant personal investment in understanding how economic incentives are woven together with Bitcoin's technical architecture and why Bitcoin can't be faked or copied, or rather, why the incentives are so strong to cooperate and why the opportunity cost is too high to defect. It's a long road, but will ultimately lead one to an understanding that a global network of rational economic actors operating within a voluntary opt-in currency system would not collectively and overwhelmingly form a consensus to debase the currency, which they have all independently and voluntarily determined to use as a store of wealth. This reality or belief system then underpins and reinforces Bitcoin's economic incentives, technical architecture, and network effect. One insight that I had, and then open up to others, is I was having a conversation with my new flatmate, and I was not aware that I'll tell you where he works, what is working currently. So I was having a conversation with him about very fundamental questions about money, and do you think expansion of money supply is good? And do you think power over money is a dangerous thing? So he was very aware of those questions, and he said that while those are true, we still need a currency or we still need a money which is losing value compared to the inflation in the economy. And I don't even want to begin to go into why he justified that, because the argument that I gave, that forget inflation, Bitcoin is an organic, voluntary network, that nobody forces you to value Bitcoin, nobody asks you to value Bitcoin. It's independent choice by each individual to use it for their own reasons, and that's why Bitcoin has value. It's not because we are building an economic system to beat inflation. It's not as if we are saying that we need an asset of fixed supply because we need to outpace the inflation necessarily. It's a system of economics incentives which incentivizes individuals to act in their own advantage or in their own self interest. And he came up with very weird arguments for why you need a currency which is losing value compared to the inflation in the economy. And Bitcoin cannot be a currency; it can be an asset. So I then later started to dig into what he does, and then he told me that he's working for Niti Aayog, and Niti Aayog is a government policy think tank which I think works on economic policy as well. It has its verticals in medicine and I think defense as well. I'm not sure, but I know that it also works on economic policies. Yeah, there lies the problem. It's not as if the Keynesians are not smart. It's not as if they don't understand what's wrong in the world of money. It's the incentive structure that makes Bitcoin happen. It's the incentive structure that makes fiat happen. That's my opinion.
Just adding to that, I mean, the final few words of the paragraph that you read goes on to manifest how Bitcoin, how every aspect of Bitcoin has been architectured, keeping game theory into mind. I mean, in the fiat monetary ecosystem, the cheater wins, right? But in Bitcoin has been designed in a manner that the cheater loses, right? The cheater ends up damaging himself or hurting himself. So if tomorrow all the Bitcoiners decide to inflate the supply of Bitcoin, it's them who end up losing. As the author here says, that understanding that a global network of rational economic actors operating within a voluntary opt-in currency system would not collectively and overwhelmingly form a consensus to debase the currency, which they have all independently and voluntarily determined to use as a store of wealth. All right. So the people in power in the fiat monetary ecosystem, when they print money, they win. But in Bitcoin, if you try to inflate Bitcoin supply, if you try to achieve the consensus, you're the one who ends up being the loser. So this is something that really amazes me about Bitcoin. Every aspect of Bitcoin is designed in such a manner that you don't have a central point of failure. Despite that, you are always incentivized to be a good actor and be in compliance with the consensus of the protocol.
Yep, well said. Yeah.
I think somebody recently said to me that the genius of Satoshi was that he understood economic incentives and human action deeply, and he did not focus on tech too much. And we did have a fun conversation. And I think while the proof of work, I don't think I'm the right person to quote the exact technical breakthrough of Bitcoin, but I think understanding economic incentives is what the magic sauce was to make Bitcoin happen. Because there have been attempts to start a peer-to-peer electronic cash system, but Bitcoin is the only one that succeeded. Yeah. I'll continue here. So it's not simply that software code dictates that there will only ever be 21 million Bitcoin. It's understanding why that monetary policy is credible and resilient and how Bitcoin achieves verifiable scarcity. That can't happen overnight for any individual. It can't be explained to someone at a cocktail party. It is a reality that is reinforced and strengthened over time only by experiencing the incentive structure and seeing it work time and time again, every 10 minutes on average. When then compared to how the dollar system works or even the underpinnings of gold, Bitcoin as money becomes more intuitive. In summary, when trying to understand Bitcoin as money, start with gold, the dollar, the Fed, quantitative easing, and why Bitcoin supply is fixed. Money is not simply a collective hallucination or a belief system. There is rhyme and reason. Bitcoin exists as a solution to the money problem, that is global QE. And if you believe the deterioration of local currencies in Turkey, Argentina, or Venezuela could never happen to the US dollar or to a developed economy, we are merely at a different point on the same curve. Bitcoin represents a fundamentally different structure and a more resilient path forward, but you have to understand where we've been and how we got here to know where we are going. Hayek writes about the price mechanism as the greatest distribution of knowledge in the world, the use of knowledge in society. When the money supply is manipulated, it distorts global pricing mechanisms, which then communicates bad information throughout the economic system. When that manipulation is sustained over 30 to 40 years, massive imbalances in underlying economic activity are created, which is where we find ourselves today. Ultimately, gold's failure was the dollar, and the dollar's failure is the economic distortion which led to and which has been exacerbated by QE. Bitcoin's promise is the solution to both. Because Bitcoin supply is fixed and cannot be manipulated, it will eventually become the most reliable pricing mechanism in the world, and consequently the greatest distribution system of knowledge. The volatility witnessed today is nothing more than the logical path of price discovery as adoption increases by orders of magnitude and as we advance toward that future state of full adoption. Right. Yeah, this is a quite loaded paragraph, but I think if everyone here was able to follow up, I think it's at the core of what Bitcoin is. I'll just stress on the last point of this because I think volatility I have started to experience is the number one criteria for people to not listen to Bitcoin, at least who are receptive to technology, crypto, whatever. And a lot of people give the argument of volatility as the problem that that's why it's not a store of value or that's why it's not recommended as savings technology. But I think I'll just read this line again. The volatility witnessed today is nothing more than the logical path of price discovery as adoption increases by orders of magnitude and as we advance towards the future state of full adoption. So my two stats on why volatility happens is because most humans only value things because other humans value things. So when Bitcoin starts to have those network effects that more and more people are adopting, we see an influx of a huge number of people because they come for their friends, for their leaders, for whoever they really admire, and it becomes a frenzy because for better or worse, humans are also scammers. A lot of humanity has that side to them, so they start to chill out other currencies or altcoins. So even GoSats, I realized today is not a Bitcoin only brand anymore. It's an unfortunate reality that it becomes difficult for Bitcoin only businesses to operate. You see thousands of altcoins and other scams come up. And that when that happens, a lot of people do not think from first principles, so they end up valuing the wrong things, and that pumps the Bitcoin price in either direction. And this is where it's like understanding a volatile individual. You cannot predict what he's going to do. So, in that sense, Bitcoin's volatility is not anything else other than human volatile nature at a mass level. Mass level. We are at the end of the first piece of the article. I'll quickly read what Vijay Bhupati has to say on SLP. I think. Yeah, it's a podcast on Stefan Livera's show with Vijay Bhupati, but I'll just quickly read what the quote is in the article. Established economists deride the fact that Bitcoin is volatile, as if you can go from something that didn't exist to a stable form of money overnight. It's completely ridiculous. Yeah. We pause in case somebody wants to share anything, and then we can begin the second piece.
I think
Bitcoin can't be copied.
so. Shreyan, my point was like recently I read about Yuval Harari's point on why Bitcoin can't be money, and for me it just feels that like most of the people just don't want to put in the effort that's required because it's so interdisciplinary, right? It requires you understanding Bitcoin. It requires you understanding like a bit of economics, a bit of like history of money, a bit of understanding of how things grow and become what they become. They are not like they're not formed by government or they're not formed by some special entity. Like things organically grow and become something, and they don't want to spend time on learning computer science or they don't want time spending learning about cryptography. And unless you spend all of that, it's impossible for you to get Bitcoin. You will just look at the fact that the price is volatile. Yeah.
True, and I think that takes us back to that statement that the author said in the first paragraph that Bitcoin is not intuitive. The people who only look at Bitcoin from one dimension who are dogmatic, for them it's not intuitive. But people who try and explore Bitcoin deeper, try and understand Bitcoin as a concept, as a revolutionary subject, then it becomes hyper intuitive.
Yeah, well put. To your point, Chitu, I don't think if I heard the entire point. Do you think I personally believe that he's being disingenuous. It's not as if he's not understanding Bitcoin. I think because in that tweet that is becoming famous, right, that's become popular right now on Twitter, he says that because Bitcoin is a trustless system of money, it's leading humanity towards. I don't know. I don't want to exactly quote him because I'm not sure. But he says that we need to restore trust in human institutions, and I think he's somebody who's studied anthropology and history, and he understands what the problem with fiat currency is. So I personally believe that it's completely disingenuous, and he's doing it for some ulterior motives.
I think Yuval Harari plays to the gallery, so I don't really buy into a lot of stuff that he says. He says things that are just the right thing to say to the right people. Yeah, so I don't. But his take on the fact that Bitcoin is not currency, sort of to me felt because he's limited just by history. He has not looked at other aspects that go beyond history in making money.
Is also associated with the World Economic Forum.
Yeah.
That is true. Like, yeah, that's where.
Yeah, I mean, that's a good clue because like incentives speak louder than words. So
Another thing I would like to add here is that he talks about the purpose of money. So when he talks about purpose of money, he talks about it in such a way that he's looking at it from a top-down perspective, like any socialist would do. Purpose of money is an individual's choice. What the purpose of money, how an individual values it for, what the money is for, and he looks at it from a top-down view. That makes a whole difference there.
Yep, I completely agree. But yeah, I think at least for a lot of people, I understand that I see at this event, for example, they work at blockchain companies, but they don't even know what they're doing. So I think for a lot of people, it does come to the point that Bitcoin is multidisciplinary. So it does require somebody to think from multiple lenses as well. Yeah. Okay. We can start the second piece of the article now. Bitcoin can't be copied. As kids, we all learn that money doesn't grow on trees. As a society, on the other hand, we have become conditioned to believe that it's not only possible, but it's a normal, necessary, and productive function of our economy. Before Bitcoin, this privilege was reserved to global central banks. Post Bitcoin, every Tom, Dick, and Harry seems to think that they can create money too. At a root level, this is the audacity of everyone that attempts to create a copy of Bitcoin. Whether by hard forking out of consensus, Bitcoin Cash, cloning Bitcoin, Litecoin, or creating a new protocol with better features, Ethereum, each is an attempt to create a new form of money. If Bitcoin could do it, why can't we? We sit here in 2019 witnessing the monetization event of an economic good, Bitcoin, on the free market for the first time in thousands of years, hat tipped to gold. Rather than stopping to contemplate the weight of that reality or to understand how or why that is possible, many people skip right past it to focus on some derivative or some way to improve upon a problem they didn't see in the first place. Everyone wants to get rich quick, and so long as there is money, there will also be alchemists. Those that attempt to copy Bitcoin are modern day alchemists. Yeah, I just wanted to read this again that many people skip right past it to focus on some derivative of some way to improve upon a problem they didn't see in the first place. So yeah, so I think one person was chilling dabs to me of how I think this article also references how there are more features to new protocols like Ethereum or some I don't even want to name them, but it's like the problem that DApp attempt to solve were never the problem that nobody posited because now especially with Nostr it has become very clear that what the problem was with social media. It's censorship, being censorship resistant, which no social media before Nostr was. And I don't know what dApps were trying to solve and how Ethereum was even trying to create a narrative. I think it was a complete marketing gimmick. But now that Nostr is here and people are still wanting to work on dApp is I think, in my opinion, uh, the telltale of why this whole thing is a scam. They tell us that Bitcoin is too slow, so they create a copy that is faster. Or they tell us that Bitcoin does not have the capacity to handle the number of transactions required by the global economy, so they create a copy that has greater scale. Then they tell us that Bitcoin is too volatile to be a currency, so they create a more stable version. It goes on and on. Next, it's that Bitcoin is too rigid and that it needs to be more programmable, so they create a copy that is more flexible. They often even tell us that their creation is not money, but instead it's a vehicle for payments or a utility or maybe a global computer fueled by gas. They also try to convince us of a world that has hundreds, if not thousands, of currencies, but make no mistake, in each case, it is their own attempt to create money. I'd like to bring Andres Antonopoulos here because if anybody of you have followed his YouTube series or his YouTube channel, that you will know that he is somebody who believes in multi-coin world as well. And as somebody who's the author of Master Bitcoin, I am nobody to say that he's stupid, but I think he is wrong because in a world we are already living in a world of hundreds of currencies, if not thousands, and we understand the inefficiency that gives rise to. So in a world which can transition to Bitcoin, there is no need to have a Justin Bieber coin. And Andres, I quote that because Andres Antonopoulos gives an example of why Justin Bieber coin has a place in the world. Yeah, he's my opinion. Bitcoin's value function.
I think he uses that exact example. Does he not? There's a book. I mean, there's a book. There is a series of talks that have been converted into books, and I've read those books. I can recall the name. Do you remember the name? What was it?
The Internet of Money. The Internet of Money. Yes.
The Internet of Money. I think he mentioned Justin Bieber in that.
Yeah, he does. Yes. That's exactly why I got so enraged because I used to look up to him. He's the reason that I started down my journey into Bitcoin. For a long time, I used to think that Ethereum has value only because Andres Antonopoulos has said it. That's me being naive. And yeah.
And I mean, I'm personally going through this article or this write-up for the first time. It impressed me so much only in 40 minutes. Okay, if you can scroll up a little the previous passage. Okay. Now, when we are reading this, I believe that most people are thinking about shitcoiners, okay? These are the allegations that shitcoiners have against Bitcoin. Oh, it's not programmable, it's too rigid, it's too boring, it's too slow, etc., etc. But I have seen a lot of people, and when I say a lot, I actually mean a lot of people who are into Bitcoin, who are into Bitcoin, especially in Bitcoin tech, and they have the same opinion of Bitcoin. Okay, thankfully we have a lot of reputed Bitcoin developers that have been there for 10 years, 12 years that the community looks up to, who keep on refuting these allegations. But there are a lot of people in Bitcoin tech who want Bitcoin to pull rabbits out of hat overnight, who want Bitcoin to compete with Visa, who want Bitcoin to compete with Ethereum, who want smart contracts on Bitcoin, who want to register property deeds on Bitcoin. There are a lot of people. This asset is not only for shitcoiners, it is also for a lot of people who are active in Bitcoin tech, who are very hasty in making changes about Bitcoin and who keep complaining that Bitcoin is very slow, it changes very slow. So I think if this guy is a non-tech guy, then I think he has a better understanding of Bitcoin. There are a lot of developers that are in Bitcoin.
हॉटस्पॉट चला गया कोई दो ना प्लीज जल्दी
We can hear you.
Oh, sorry, I lost my internet. I'm really sorry. Is my voice back?
Yeah, we can hear you.
Okay, great. Yeah. Yes, if no other thoughts or insights, I'll continue. Bitcoin's value function. If an asset's primary, if not sole utility, is the exchange for other goods and services, and if it does not have a claim on the income stream of a productive asset, such as a stock or bond, it must compete as a form of money and will only store value if it possesses credible monetary properties. So just one point that I think I have also started to slowly realize that I think Saifuddin says it in a talk which really hit me, that Bitcoin is its own Lex Friedman's interview. The Bitcoin is not a comparative to stocks. Stocks and equities will always exist. It's a comparative to monetary premium on stocks. That we won't use stocks as a store of value instruments, because they will always be a claim on the income stream of a productive asset, as this asset claims, as this article claims. Because stock is always you owning a part of somebody else's business, and if that business is producing valuable goods and services, then of course you can grow your value investing in that business. But you don't need to invest in a business just because others are investing in it, or just because we are forced to monetize it because there's no other form of money which is credible. Yeah, this is the point I wanted to make. I'll read this again. It must compete as a form of money and will only store value if it possesses credible monetary properties. With each feature change, those that attempt to copy Bitcoin signal a failure to understand the properties that make Bitcoin valuable or viable as money. When Bitcoin software code was released, it wasn't money. To this day, Bitcoin software code is not money. You can copy the code tomorrow or create your own variant with a new feature, and no one that has adopted Bitcoin as money will treat it as such. Bitcoin has become money over time only as the Bitcoin network developed emergent properties that did not exist at inception and which are next to impossible to replicate now that Bitcoin exists. Yep. Right. One point that I think I remember Raj made, which really stuck with me, is that the simple reason that Bitcoin can never have a competitor is that because we can only afford as humanity one proof of work blockchain. The simple reason is that if you try to run another proof of work blockchain, then I think if everyone here is aware that proof of work is the only way to have a trustless verification of money or ledger called Bitcoin blockchain. So the only simple reason that we cannot have another Bitcoin, or this stupid to even think of creating a new Bitcoin or Bitcoin 2.0, is because we can't afford it. The simple reason is that it requires a lot of computing power, and once Bitcoin exists, there's no reason to now start a new network. So I might be misquoting somebody, just my personal thoughts. Yeah.
And also historically, money always consolidates to one. So like for a long tenure of time, we do not have an evidence that in a civilization for a long tenure of time multiple currencies have existed. It always comes down to one. Like people try to use two currencies, okay, like gold and silver, but eventually gold ended up eating silver, and silver was no longer used as a store of value or as a monetary unit as such. So historically, we don't have an evidence in any reputed civilization for a long period of time that multiple currencies coexisted. It always comes down to one thing.
Right.
Shran, there's background noise in your side, so you can maybe there's some background noise coming from your side, so
Okay.
we can shift to a less crowded place if that's possible.
Just give me 1 second. I'm finding a quieter place. Yeah, that will help. Yeah. No, I just wanted to inform. Yeah, I'll continue for a while. So I was here. Yeah, one point that I want to add to Faisal's point is that currently also there's only one money, US dollar. So we use rupee in the jurisdiction of India, but in the strict definition of economics, money is the most commonly accepted medium of exchange, and the most commonly accepted medium of exchange in the economy is US dollar, not rupee. So yeah, it's like money is a winner takes all game, and we can only ever have one money.
So, and even before dollar, it was the pound, and before that it was the Dutch currency, and before that it was the French currency. So even in the fiat world, there's always been one global money.
Yeah, exactly. I'll read from here. These properties emerged organically and spontaneously as individual economic actors all over the world evaluated Bitcoin and determined to store a portion of their wealth in it. As Bitcoin's value increased, it became decentralized, and as it became decentralized, it also became increasingly difficult to alter the network's consensus rules or to invalidate or prevent otherwise valid transactions, often referred to as censorship resistance. There, there remains reasonable debate as to whether Bitcoin is sufficiently decentralized or sufficiently censorship resistant. But while this may be the case, there are other considerations less subject to debate. Right, I'll just take a quick pause here because I wanted to highlight this point. There remains reasonable debate as to whether Bitcoin is sufficiently decentralized or sufficiently censorship resistant. I think there's a great article, I think it's actually a Reddit comment by Gregory Maxwell on the only real attack vector to Bitcoin is that it will not be decentralized, and the only reason that it will not be decentralized because not enough people will care to maintain its decentralized and censorship resistance properties. So one thing that I want to open up for debate, and we can take this after the session, is that Bitcoin mining currently is a completely regulated business. So you can run solo miners at your home. You can still only requires you to have electricity, access to cheap electricity. But if you want to run Bitcoin mining at any considerable scale, and those are the miners which actually includes Bitcoin transactions, which are probabilistically more likely to include real world Bitcoin transactions, you will see that they are all KYC'd. So any new Bitcoin that comes into existence, that person is documented and identified, and whenever they sell it to, they have to sell it to a regulated entity. So there's a reasonable debate going on in the Bitcoin ecosystem that have we lost censorship resistance already? So yeah, while I think that as soon as somebody regulated or withdraws into self custody, you are out of the regulated system because you can send it to a friend. Nobody needs to ever know. But yeah, it's a debate that has come up time and time again. Okay, if no thoughts, then I'll read. While this may be the case, there are other considerations less subject to debate. Bitcoin represents by far the most decentralized and most censorship resistant monetary system in the world today, whether compared to traditional currencies or other digital currencies or commodity monies like gold. Bitcoin derives its value because it is decentralized and because it is censorship resistant. It is these properties which secure and reinforce the credibility of Bitcoin's fixed 21 million supply. That is why it is an effective store of value. Bitcoin becomes increasingly decentralized and increasingly censorship resistant as its value increases and as it scales at all levels of the network. Repeat. Right. So this is how Bitcoin is becoming a self-fulfilling prophecy that we have more mind. I think I'll actually start from here. I think higher price is how you get new people. Higher price incentivizes more miners to start mining because there's greater block subsidy to be won. There's greater value of those new Bitcoins. And as you see greater hash rate, you see more security because nobody can now control 51% of the network. As you see greater decentralization, greater hash rate, less percentage of hash rate with one entity, you have more confidence because Bitcoin now cannot be stopped anymore. It's more decentralized. As you see more confidence, more and more users will be convinced of its potential and power. Cumulative Bitcoin in circulation. This is how the Bitcoin supply works. I think it's called logarithmic. This curve. I might be wrong. I think it's called some asymptotic curve. That this is how Bitcoin's supply comes into existence.
I think
Monetary.
if you just look at the supply curve, that sort of itself is a good enough reason to believe that the adoption of Bitcoin will be gradually and suddenly. Like it will be kind of in the reverse format, because like when you have a lot of Bitcoin coming into supply, you will take a lot of time to absorb that. But when you have very small amount of new Bitcoin coming into circulation, like yeah, so it will be inverse of this graph. Inverse not on the x-axis, but
Right.
yeah.
Right. Yeah, that makes sense. I think that's also why a lot of people have this assumption that mining will become more and more centralized or more and more unprofitable. But I actually think because the value of Bitcoin will suddenly, I mean, like the title of the article, will keep on rising at a much faster pace, or at least it will never go down. So you will have more miners joining the network, more people trying to find ways to optimize for energy, and Bitcoin mining will thrive for potentially forever.
Yeah,
Just a
so
point to add, like Bitcoin mining has a purpose and an incentive. All right, the purpose of Bitcoin mining is to secure Bitcoin's network, and the incentive is to generate profitability. So profitability from the word go was never the purpose of Bitcoin mining. The purpose was to secure the system. Profitability is the mere incentive.
Right. But you need that incentive, right? You need that incentive for Bitcoin mining to continue.
No, there are a lot of things that humans do in their day-to-day life that they are not monetarily incentivized to do. There are a lot of things on which we spend in which we don't expect a return on investment, but we do them to secure ourselves. There could be many examples like buying a house, for instance. You don't get a return on investment on the house that you're buying, right? Because you buy it to save yourself from the sunlight, you buy it to save yourself from the storm, from rain, from insects, from animals, so that you have a secure place where you can live safely, right? The house does not give you a return on investment. Despite that, you spend more money on buying a house than probably buying anything in your entire life, right? You don't get an ROI on that. In fact, you spend on its maintenance, right? But you buy it to keep your family, to keep your valuable things, to keep people that you value safe and secure. If you value Bitcoin, okay, if you value Bitcoin, then there will be a lot of people who would want to mine to secure the system because they value Bitcoin, okay, because maybe they have a lot of Bitcoin, they don't want their Bitcoins to get jeopardized, they don't want somebody to pull off a 51% attack. If my life saving is in Bitcoin, which should be a considerable amount of money, then I won't mind spending on electricity or computational power to ensure that my life saving is secure even if I'm not getting a return on investment. So that is something that really struck me that I read recently, that Satoshi Nakamoto never invented or never came up with the mechanism of proof of work with the purpose of incentivizing. Okay, with the purpose of profitability. The profitability is an incentive, but the purpose is to protect the network.
Hmm. I think it's an interesting point, and I think I do agree that since value is subjective, then no individual can ever assume that why other people value Bitcoin and what's the reason that they invest energy and time and resources into mining Bitcoin. I think yes, I think fundamentally I do agree that security is a human trait that we invest more and more time, more and more energy, and we value it more and more, not simply because it will get us more resources or more money. Okay, I'll continue from here. Monetary systems 10 to 1. Yeah, interestingly, we were discussing exactly this. Every other fiat currency, commodity money, or cryptocurrency is competing for the exact same use case as Bitcoin, whether it is understood or not. And monetary systems tend to a single medium because their utility is liquidity rather than consumption or production. When evaluating monetary networks, it would be irrational to store value in a smaller, less liquid, and less secure network if a larger, more liquid, and more secure network existed as an attainable option. Apply a common sense test. If you worked for 2 weeks and your employer offered to pay you in a form of currency accepted by 1 billion people all over the world, or a currency accepted by 1 million people, which would you take? Would you request 99.9% of one and 0.1% of the other? Or would you take your chances with your billion friends? If you are a US resident but travel to Europe once 1 week a year, do you request your employer to pay you 152nd in euros each week, or do you take your chances with the dollars? The practical reality is that almost all individuals store value in a single monetary asset, not because others do not exist, but rather because it is the most liquid asset within their market economy. Anyone with Venezuelan bolivars or Argentine pesos would opt into the dollar system if they could. And similarly, anyone choosing to speculate in a copy of Bitcoin is making the irrational decision to voluntarily opt into a less liquid, less secure monetary network. While certain monetary networks are larger and more liquid than Bitcoin today, example the dollar, euro, and yen, individuals choosing to store a percentage of their wealth in Bitcoin are doing so on average because of the belief that it is more secure, decentralized, leads to censorship resistant, which leads to fixed supply, leads to store of value. And because of the expectation that others, example of billions soon to be friends, will also opt in, increasing liquidity and trading partners. Right. Why Bitcoin can't be copied. Many individuals creating digital currencies neither accept or admit that what they are creating has to be money to succeed. Others that are speculating in these assets fail to understand that monetary systems tend to one medium or naively believe that their currency can outcompete Bitcoin. None of them can explain how their digital currency of choice becomes more decentralized, more censorship resistant, or develops more liquidity than Bitcoin. Take that further, no other digital currency will likely ever achieve the minimum level of decentralization or censorship resistance required to have a credibly enforced monetary policy and to literally steal a page from the Bitcoin standard. How to decide if you need a blockchain? Do you need digital cash? No, you don't need a blockchain. Yes, use Bitcoin, the only blockchain that works. So yeah.
Only Sethulin could have come up with something like this. Educating people with humor.
Yeah. Bitcoin is valuable not because of a particular feature, but instead because it achieved finite digital scarcity through which it derives its store of value property. The credibility of Bitcoin's scarcity and monetary supply only exists because it is decentralized and censorship resistant, which in itself has very little to do with software. In aggregate, this drives incremental adoption and liquidity, which reinforces and strengthens the value of the Bitcoin network. As part of this process, individuals are at the same time opting out of inferior monetary networks. This is fundamentally why the emergent properties in Bitcoin are next to impossible to replicate, and why Bitcoin cannot be copied or outcompeted. Because Bitcoin already exists as an option and its monetary properties become stronger over time and with greater scale, while also at the direct expense of inferior monetary networks. One thing that I wanted to bring up, it could be a side note, is the power laws in Bitcoin. I will shamelessly shill power laws in Bitcoin. So I am studying them. I'm not saying that I am confident that this is how Bitcoin is evolving, but I will definitely recommend checking out Giovanni's work. He has a YouTube channel called Quantonomy, and he's a strong advocate and proponent of that Bitcoin is following power laws. And I think what my takeaway, my penny drop moment was that power laws is followed in all human languages by exception. It's like you could be born in any culture, any part of history. You could be born on Mars and build your own society and come up with your own human language, and you will end up using the words that you use in a power law. So it's an expression of human value, right? The language that we use, it's an expression of what we value. Because we say things, we invest energy in writing and talking to other people because we find value in that. So money itself is also a language. It's called a language of value. So there is no reason that money itself will also not evolve in a power law. This is my argument for why power laws are how Bitcoin is going to evolve. And once you realize that Bitcoin already exists as an option and you don't need to now have another money, you realize that this language is going to be the dominant language in money. Do check it out. Somebody's curious. One would likely never come to this conclusion without first developing their own understanding of the following: that Bitcoin is finitely scarce, how or why; that Bitcoin is valuable because it is scarce; and third, that monetary networks tend to one medium. You may come to different conclusions, but this is the appropriate framework to consider when contemplating whether it is possible to copy or outcompete Bitcoin, rather than a framework based on any particular feature set. It's also important to recognize that any individual's conclusions, including your own or my own, has very little bearing in the equation. Instead, what matters is what the market consensus believes and what it converges on as the most credible long-term store of value. Right? Yeah. I think there's a famous metaphor that the invisible hand of God is the market, because no individual ever has the power to shift the market itself. So I think it's by Adam Smith. So don't take it too literally, but it's by one economist. The empirical evidence, price mechanism, and value demonstrates that the market continues to determine why Bitcoin is different despite a significant amount of noise. Before speculating, try to understand why Bitcoin works and why it's unique. When someone inevitably tells you about a better Bitcoin or some differentiating feature, remember that the market, which has come to this same crossroad over the last decade before you, has considered those trade-offs and chosen Bitcoin over the field for very rational reasons. The minority rule. We have reason 9, Mark. I think I'll just quickly show you guys how many parts there are to this. There are, you know, yeah, 16 parts to this. So I apologize if we were only able to cover 2 parts. I think we can cover this article and we can then decide if we want to continue or do something else. The minority rule. Nassim Taleb writes about a very small intransigent minority can force its preference on the majority, referring to it as the minority rule and explaining why the most tolerant wins. Bitcoin and monetary systems are a perfect example of this phenomena. If a very small minority converges on the belief that Bitcoin has superior monetary properties and will not accept your form of digital or traditional currency as money, while less convicted market participants accept both Bitcoin and other currencies, the intolerant minority wins. This is exactly what is happening in the global competition for digital currency supremacy. A small minority of market participants has determined that only Bitcoin is viable, rejecting the monetary properties of all other digital currencies, while the majority is willing to accept Bitcoin along with the field. Because of its intransigence, the minority is slowly forcing its preference on majority. In the world of digital currencies, diversifying by picking the field is the equivalent of letting the crowd or the intolerant minority choose what your future money will be, while resigning yourself to only a fraction of what you otherwise would have saved. Evaluate the trade-offs and consider the minority rule before trading in your hard-earned value for a flyer. Money doesn't grow on trees. I'll actually read this again if you guys don't mind, because I think it's a powerful paragraph.
It is absolutely amazing. This inference is absolutely wonderful. I think Mango recommended this article to me a couple of days ago, or all of us. But this paragraph is absolutely outstanding.
Yeah, we discussed it in the last session about Nassim Nicholas Taleb's
This
article.
goes on to show that how even if a small group of people, even if they are lesser numbers, if they are absolutely adamant and have a very high conviction on a proposal or on an idea or a thought, they can impose that thought or proposal on the majority and make the majority adopt it.
And that is why when me and Shan were discussing on Bitcoin policy thing, we were of the opinion that if we have the time on our side, if we want to do it slowly, and we don't have any such hurry, then might as well just go for Bitcoin only policy thing too. I don't know, like Shan, what's your plan? But like this,
I completely agree.
once you read the article, you'll be more convinced about it.
Bitcoin is a 400-year-old project. So anything else, any working on crypto coin, it's like you're doing disservice to your own soul. So well, I'll probably read this paragraph again if you are okay with it. Let me complete this, and then we can end the session maybe if we require to. Bitcoin is a remarkable cryptographic achievement, and the ability to create something that is not duplicable in the digital world has enormous value. This is Eric Schmidt, former Google CEO. Views represented are especially Parker Lewis and not those of Unchained Capital or my colleagues. I'll read this again. Minority rule. Nassim Taleb writes about a very small, intransigent minority and force its preference on the majority, referring to it as the minority rule and explaining why the most intolerant wins. Bitcoin and monetary systems are a perfect example of this phenomenon. If a very small minority converges on the belief that Bitcoin has superior monetary properties and will not accept your form of digital or traditional currency as money, while less convicted market participants accept both Bitcoin and other currencies, the intolerant minority wins. This is exactly what is happening in the global competition for digital currency supremacy. A small minority of market participants has determined that only Bitcoin is viable, rejecting the monetary properties of all other digital currencies, while the majority is willing to accept Bitcoin along with the fiat. Because of its intransigence, the minority is slowly forcing its preference on the majority. In the world of digital currencies, diversifying by picking the field is the equivalent of letting the crowd or the intolerant minority choose what your future money will be, while resigning yourself to only a fraction of what you otherwise would have saved. Evaluate the trade offs and consider the minority rule before trading in your hard earned value or a flyer. Money doesn't grow on trees. Yeah, it's a powerful statement. It's not just one educational piece. I think the last statement does stress on it. The last two sentences: evaluate the trade-offs and consider the minority rule before trading in your hard-earned value for a flyer. I think it's like in the word in Bitcoin standard is lower time preference, but a more colloquial term is instant gratification. It's very tempting to think that we can make money quickly, and that's why most people get forced into gambling, either into cryptocurrencies or other any scheme or any health choice. Honestly, I
That's
think
high
once you
time
realize,
preference, just to point out.
yes, sorry, not lower time preference, higher time preference, yes. Or instant gratification is the. I think that's the more. I heard that. No, I think lower time. I related it to high time preference, but yeah, that's the more accurate one. Yes, we have reached the end of the session. So, someone has any questions, please, you can take them out.